Hi, Larry Gaines, Power Cycle Trading. In this video, I want to take you through what I call a progression of a seasonality trend shift. So this is a seasonality trade based on going long July soybeans, short July wheat, and this is based on statistical stats going back 15 years, and so the last 14 out of 15 years, this has been a very profitable winning seasonal trend trade to the upside. So you want to be long soybeans in July and short wheat in July. So it's done as what we call a spread. So the spread kind of starts to perform around the April the 8th through April 27th. So the way this is marked, and you can see it's a 93% winning probability, 14 out of 15 years. So it's marked on buying it on April the 8th and then selling on April 27th. So it's been over $1,900 on a per spread profit basis. So, if you buy it in here, you can see the seasonal trend to the upside and then you sell it there. But what you need to do is overlay a cycle indicators to make sure that you get a good entry into this potential seasonal trend. Sometimes it may not happen. So one year it didn't. So here's how it looks for this year, 2017. So in this spread, what you're basically doing is pairing the trade. So you're going to be long soybeans in July. So we went long on the 19th right here. So you can see the soybeans stable, starting to move to the upside. So went long soybeans on the 19th, but on that exact same day went short wheat. So here was the wheat right there on the 19th. Now what you'll see is wheat really took a dive to the downside, just really got hit hard to the downside. So we basically shorted wheat on the 19th, and you see it hit real hard, and went long soybeans on the 19th, and it just kind of stayed sideways to up. So today the 25th, you can see it started to stall out here, and you see wheat started to come back up. So we exited the trade, and here's what it looks like as a spread trade. So as the spread on the 19th, we went long July soybeans, short wheat. So the spread at that time was $526.87, basically $526 per bushel. You had soybeans over wheat. Okay, so then it went from here on the 19th, and yesterday the 24th had it was up to 551. Today it started to roll over, so exited this trade today for a really nice profit on it starting to roll back over and turn to the downside. So right here at 549, we had soybeans over wheat. So sold, liquidated the soybeans, sold the soybeans, sold to close, and then bought to close the wheat. So reversed out of the spread. So it went from 526 right here to 549. That's 23 points, and it's $50 per point. So that's $1,150 per spread. So if you did one spread here, took it off here, you made $1,150. And the great thing about these types of spreads, they're not correlated to the broad market indexes. So even if the S&P, whatever, had been going down, this is still just kind of doing its own thing. So hope you enjoyed this video. Talk to you on the next video update.